Hi everybody, welcome to the Leeb.com video for November 30th, 2011. Be sure to visit Leeb.com, Leeb.com to sign up for our free market forecast emails. Well, today markets were euphoric after major central banks around the world got together to increase the availability of US dollars as emergency lending to reduce the risk of a liquidity freeze as a result of the ongoing European debt situation. Now, the dollar, despite its own troubles, is still the most liquid and ubiquitous global currency, and therefore it's still regarded as the hallmark of safety, evident by the rally in treasury bonds when the stocks were going down. The U.S. Federal Reserve slashed the interest rate on dollar swaps by half to 50 basis points so that foreign central banks can borrow dollars from it more cheaply. The European Central Bank, the Bank of England, the Bank of Canada, the Bank of Japan, and the Swiss National Bank all further reduced the rate at which they lend to, that they will lend out dollars so that banks under their oversight can have easier access as well. The move was widely cheered by traders and investors. Besides stocks, the euro currency and European bonds all had a nice bounce back day. And of course, commodities, the bellwethers of economic expectations, also rallied. Given the many starts and stops out of Europe in the last several months alone, the markets may still take another turn for the worse, but we are likely to at least challenge recent highs, somewhere in the neighborhood of 1280 on the S&P 500 heading into year's end. Now, somewhat lost in the shuffle today too is China's central bank's sudden announcement that its banks will be allowed to keep a slightly lower percentage of capital in reserve, in essence permitting them to lend out more money. This is a reversal of the country's policy over the last year. Chinese leaders had been hinting at potentially more dovish monetary policy lately, and today was a clear confirmation that the powers that be in Beijing are targeting growth rather than inflation as the primary concern now. Now that should be bullish for commodities and commodity-related plays. That's it for today. Thank you for watching and join us again soon.